Hey everybody, welcome back to the channel. Today is Sunday, April 5th. It's about 1 p.m. and I'm looking at preparing for trading tonight, and I'll be trading futures. Typically, I try to post videos about trading gaps, particularly earning gaps. Quite frequently, different stocks will have earnings announced and it creates a gap. So overnight, there'll be a gap created in the pre, and the post market. So something like this where we close here, and then the next morning we wake up and we're actually here. So this is on the Spider ETF. You can see that up in the top left-hand corner. But that's kind of what I trade. I don't exclusively trade the Spider. A lot of times I will trade different stocks that are gapping up. But recently I've actually been trading futures. And so, a couple of reasons for trading futures. If you work like me, I had mentioned that I work during the day when the market opens. And so, trading futures is actually very good for me because it opens on Sunday night about 6 p.m. Eastern. So, for me, that will be in about 5 hours. And I typically don't trade for about half an hour. So, right up here, if we switch to futures trader, you could see that right up here. I have different tabs. My active trader is for stocks, and then my futures trader is for futures. So right now I'm trading the ES&P Mini Micro, symbols right up here, Micro, MES. So it's good if you're trading during the day and you want to trade when you come home. It's actually open 24 hours, and it opens on Sunday night as well. So it helps. I want to kind of go through the process of setting up to trade for the night. I know there's a lot going on the screen here, and we're gonna break it down. But before that, what I want to talk about is the reason why I haven't been trading. So the reason why I have not been trading stocks, gaps in particular, things like this. Investors need to prepare for the earnings season from hell, right? Everything is going down. It's been pretty bad. Um, if we look at the 6-month chart, everybody knows the spider's been dropping. Everything's been dropping. We went from 336, 337, right down to 223 in, what is this, like a week? No, in a month. All right, so we did that in about a month, which is a lot. So the challenge right now is the markets are pretty extended, and most traders don't want to short it because we were right down here up until the recent bounce. Now I would definitely consider shorting it. But we have this huge sell-off, right? And we're down here. Last thing you want to do is sell into it here because we're already down so much. So most investors don't want to short it. So then we get days like this where we have a nice rally, and most likely if we're doing a ABC pattern, here's your A to B, we have a retracement, and then B to C will typically be the same length as your A to B, so we can expect a continuation down. It's also called an impulse leg or a measured move, right? Your second measured move is equal from here to here is typically equal here to here. So that's typically what people are looking at. So I definitely don't want to short it, but anytime I've looked at a gap, the market's always kind of pulled it back, and it's been very difficult to trade. And if we look at the 5 days, of course, we came up a little bit and then we're rolling over again. So my expectation is a continuation to the downside. So be careful. We have, we have some tough times coming ahead of us, right? You can see here, everything's closed because of what's going on. So when the companies start coming out with earnings, that's when we start having gap downs. And this is kind of what I trade. If they have good earnings, you typically get a gap up overnight. And if they have bad earnings, you typically get a gap down. And there's a couple of different ways to find gaps. I don't want to go too deep into it today. I want to prepare to trade for tonight. Let me close the active trader. But the easiest way is to just check the news, see what's going on, see who's making headlines. That's one way. That's a free way. If you want to pay for a gap scanner, like I did, you can use a gap scanner as well. That'll take all the guesswork out. And then if you have a full-time job and you cannot trade during the day, you can always trade futures. So what do I got up here? So right now, here's what I got. On the left-hand side, I'm looking at the 5-minute chart. On the right-hand side, I'm looking at the 2-minute chart. Normally, I place my trades on the 1-minute chart on the right-hand side, but the volatility has been pretty great. So let's break this down. Let me hide all my averages. Let's see, that's hidden. So here we go. Let me hide these to clean up the chart, and we're gonna break it down. All right, so this should be a little easier to see, and I can delete all these lines. So what do I have going on? See the orange line here? Orange, purple, green. Those are by pivot point lines. And the way that you get that is by coming up here to the studies and just go to pivot points. And I use this one right here. So you go to pivot points, go to add, and I pretty much have everything the same. And a lot of times what will happen is what I'll do is I'll scrunch the chart up and I'll look for bounces around those pivot points. So the first area, the first green area here, that's support 1, and that's support 2. And then we have a resistance 1. Of course, these are for the next day here. That's for the next day. Okay, so this is for tonight. So what I'll do is I'll come over here and I'll look at bounces, and you could see on this side on the 5-minute chart we had a bounce here. So I will place just a white line representing that we had a bounce there. And I typically try to place them around support or resistance pivot point areas. I wouldn't want to take this one and put it here, right? And then make a zone this big, because that just doesn't make any sense, right? So speaking of, support and resistance are areas. They're zones. They're not specific lines. So what I like to do is just put my box down, and I like to make it an area. So from this point here to S1, this is my zone. And you could see that we have a reaction here. We have multiple reactions here. If I zoom this in on the 5-minute chart, you could see, let me delete the arrow. You could see multiple reaction 1, reaction 2, reaction 3, and actually we came back for a 4th one. So we were coming down. Let me get my white color. So we were coming down here, right? We bounced, boom, right into support, had a small bounce, people still trying to sell, pushed through just a hair more. Now buyers are starting to come in. We came back to retest it a 3rd time, pushed up even higher, retested it a 4th time, and we pushed right up to the VWAP. And this is where we closed Friday. So more often than not, you have these areas act as zones where you can expect a bounce, and this is kind of what I do. So let's look at this. So what I do is I scrunch this up when I'm preparing to trade for the next day, and we're looking. We're looking right now. We're looking from the green line over to the right. This is going to be our Sunday night open. So I scrunch this chart up and then just basically plot lines. So I come down here to my tool, grab my price level, and the first area that sticks out at me is right here. So you see this? We have top and tail there, multiples here, and then plus a bunch here. I know you can't really see them because of the current day open and the pre-market labels. So what I do is I place my support and resistance area right about those top and tails here, and then another one here because of the touches, and everything in between is in a zone. So everything that's between this line and this line is in a zone representing resistance, right? I hope you're following me. So that's what I do. Then I can come over here, stretch the chart out a little bit, and I will take my box. So if you're on Think or Swim, you can click on a pre-existing box, hit space, that'll copy it, and then I'll just place my box right there. Boom, I got my first resistance area. Then copy this box, or I can just delete it, or I can just move it, and then my second area would be here. Now I know this is a little bit bigger of an area, so I usually focus on the most recent price action. I put more weight on that. So if I had a line from back here that was up here, I put a lot more weight on the most recent price action. So what I would do is I would make my area a little bit smaller because of these wicks. But it doesn't really matter how big the area is. I'm expecting, the expectation for me, right? What I'm thinking is if we come down here, the expectation is anywhere in this area is a potential reversal zone. It could skyrocket up to here, or we could get a small, tiny bounce and then break through. So this is all something that I have to watch and read how the market, how the candles are forming and how the market reacts to this area. The area is simply to watch to see if the buyers or sellers are in control. You don't want to blindly buy or sell, but that's basically it. I am expecting a reaction just like we had one here. Right? That's basically what I'm expecting. And then even if you don't take this, you can always short it at the VWAP as well. But I wouldn't short it because of the close of the day. This was the last half an hour of the day, so I wouldn't short it there. So let's continue. We had another box. So I would place another box right here. Now, why here? Well, the line, let me draw this out. This line here is representing the current day open. So this is where we're going to open. And this is the pivot point. So I just want to see how the market reacts. Okay. And the purple line is the 2,500 round number. A lot of times it's a psychological number. So a lot of times we can expect a reaction to that. So that's all it is this is just a mental note for me. Hey, it's a round number. It's a psychological number that people will react to. Okay, so let me delete this. So we got our one box, we got the second box, we got the third box here. So for now, I'm not really going to do anything. The only thing I'm going to do, I'm struggling with these drawing tools. The only thing I'm going to do is just make sure that my boxes are transferred over on my trading time frame, and then I will watch to see how it opens. And as soon as we open, the lines on this side, on the left-hand side, will disappear. So this green line, this pink line, and then this resistance line, this will be gone, and all I'll have is the current day. So that's all I am watching. Now, if you're having a hard time plotting support and resistance, simply go up to the 15-minute chart here, and you can do it off the 15-minute chart. And if you're having a hard time, just scrunch it up. And actually, as a matter of fact, we have a bunch of rejection off of this level. So this is a good zone to pay attention. And so the expectation for me is if we break through, come back and retest it, we're going up, right? And if we break below, I would wait for some kind of a retest, and then we're going back down. So this would be the expectation. Same thing up here. If we do this, we might take a little while to get there, but if we get up here, same thing, I would be looking for a rejection off this level because we had all this rejection. So this area is where heavy sellers come in, and this area is where heavy buyers come in. You can tell. Okay, so that's kind of what I'm looking at. I'm looking at these two areas: heavy sellers, heavy buyers. Now, long-term prediction is we're going to roll over at some point, but I wouldn't just blindly sell it out of the gate. I would wait about a half an hour, see which direction we're going, and then I would start trading. So I hope this helps. I don't want to make this too long. If you got any questions, leave me some comments below. And happy trading to you. I wish you all the best. I will see you in the next video. I hope you enjoyed this video. If you did, hit the thumbs up button, telling the YouTube algorithm that you enjoyed it, that there's quality content in this video so it can get recommended and help more people. And also, if you don't want to miss the next episodes, hit the sub button, hit the bell icon. YouTube no longer recommends every video just because you're subbed. So if you don't hit that bell icon, you're going to miss videos. So if you're enjoying this and you want to follow along, go ahead and hit the thumbs up, hit the like button, and I'll see you in the next video.